If you've made a decision to aim for a long-term and successful finance career, taking the Chartered Financial Analyst CFA exam and studying the curriculum is an excellent way to ensure you have a strong knowledge base and top-notch skills. Are you ready to take the bold step to invest in yourself? CFA Society Nigeria is at your disposal, promoting the highest standards of investment practice in Nigeria. As an affiliate of CFA Institute, CFA Society Nigeria seeks to promote the highest standards of investment practice in Nigeria and to provide a vibrant community in which its members and other key players in the investment industry can interact and grow. When you have the CFA charter, you're globally recognized. Take advantage today by writing the CFA exam and joining us at CFA Society Nigeria. For more information, visit us at cfasocietyn.org. CFA Society Nigeria, making finance a force for good.
Money Talks.
Money Talks.
Money Talks. Money Talks.
Money Talks with CFA Society Nigeria. Let's talk about money.
Hello everyone, and thank you so much indeed for joining us on Money Talks on 92.3 Inspiration FM Smart. Uzechi is my name, and we're back today on the program. This is the Financial Literacy Program, and it's brought to you by CFA Society Nigeria. Today, we're going to be talking about investing in financial assets, and our focus will be on mutual funds. You heard me right there. Investing in financial assets, and our focus is on mutual funds. And my guest on the program today is Kike Mesubi. Kike Mesubi is an astute wealth manager. She is currently the managing director, RMB Nigeria Asset Management Limited. Prior to that, Kike was a team lead for investor services at FBN Holdings PLC, and was also a key part of FBN Quest Asset Management. Kike holds a bachelor's degree in economics from the University of Ilorin and a master's degree in finance and investment from the University of Exeter in the UK. She's a CFA charter holder and is a governor of CFA Society Nigeria, serving on the board as the Assistant General Secretary of the society. So we've got for ourselves the big fish this evening, and it doesn't get bigger than this really. So Kike, good evening to you, and thank you for your time on the program this evening.
Good evening, Captain Smart, and good evening to our listeners at home and everywhere. It's a pleasure to be here this afternoon.
Absolutely. Last week I did say that I had a gift and nobody was able to get that gift from me. Today, I hope you just reach out and take that gift from me. So take this number down, 0700 923 923 923. That's 0700 923 923 923. The number again, 0700 923 923 923. Or you can just send us a message on WhatsApp, 0817 313 6193. That's 0817 313 6193. That's how you can get in touch with us in the studio here while the program lasts this evening. You can also go to the CFA Society Nigeria website. You can go to the LinkedIn, the YouTube, and the Facebook pages. CFA Society Nigeria on LinkedIn, Facebook, and YouTube. That is CFA Society Nigeria on LinkedIn, Facebook, and YouTube. Or just go to the website, cfasocietyng.org. cfasocietyng.org. As the program is going on, you can tweet at us at CFA Society NG. That's on Twitter at CFA Society NG. Or you can join the Instagram Live also at CFA Society NG. So back here in the studio where Kike is comfortably seated, Kike, once again, so good to have you.
Good to be here.
Yeah. Kike, so quickly, we're talking today about investment, financial investment. And the first question I would like to ask you, people will say, now we money no day, Why do you think people should invest instead of saving? Because in the face of scarcity or paucity of funds, they should be asking me to save my money and not invest my money. So why should I invest now instead of saving? Or you can also go ahead and tell us the difference between saving and investing.
Thank you, Captain Smart. I would attempt to answer that question by differentiating what is savings and what is investment using an example. So I'm going to use an analogy of you buying a car in 2 years' time.
In 2 years' time?
In 2 years' time.
Okay.
So that will be 2025. And the merchant has told you it will cost you 2 million to buy the car in 2025. Based on your cash flows, you've estimated 43,800 as money to set aside every month, so that come 2025 you have 2 million to buy the car. You have two options. Option one is to put the 43,800 in a commercial bank in a savings account and earn 5.2%. If you do that, it will take you 24 months to have 2 million. Alternatively, you can say, I would invest that 43,800. I'll make an assumption of an interest rate of 10%. If you do that, you would have accumulated 2 million in 18 months. So from that example, we can see that I say savings and investment are tools or routes to the same destination. One will take you longer. In this example, a savings approach will take you 24 months to accumulate 2 million. The other will take you shorter, and that is investment. That will take you 18 months. So the key difference is that with savings, you earn less return than you will get from investment.
Wow. This is if we were in church, we would say this is Rema. because I would have thought that savings would have gotten me there faster. But you're saying, so why would investment get me there faster?
So I'll give you some examples. If you think of counterparty, so I'll just run through 4 criteria and try and differentiate savings from investment along those 4 criteria. The first one is a counterparty. So when you do savings, your counterparty is usually a commercial bank or used loosely a financial institution. When you invest through a broker or an asset manager or any other person in that broad category. The other key difference is the return. So when you put your money, when you save, you get a lower return. And why is that so? You get a lower return. Like we say in Nigeria, money way super sweet.
Na money kill.
So if you save, you'll get a lower return. In Nigeria today, the interest rate or the return you get from a savings account is about 5.2%.
It's annoying.
It gets worse because after the third withdrawal in a month, you even lose that 5.2%.
Wow.
Alternatively, if you invest, you get potential higher return depending on the kind of investment that you get into. Risk is another key criteria. Like I mentioned, with savings, the risk is lower. With investment, you take potentially higher risk, but for a higher return. In terms of your time horizon, so if you put your money in a savings account, you can get your money at a snap of a finger or by just going to an ATM. So the horizon is short.
Yeah.
But when you do investment, you're taking a longer time horizon. Because you're taking a longer time horizon, you're compensated for that horizon with a higher return. And the last one here is protection against inflation. So for this one, I'll give an example. If you saved 1,000, let's say a year ago, and you wanted to buy an item today, which now costs 1,200 by virtue of inflation, and you kept that 1,000 naira in a savings account, today you'll get 1,502 naira. So you are short by 1 naira 60 kobo, 160 naira. That means you can't afford what you were saving for. With investments, that risk is minimal. So I think ultimately it's really to say that it's the futures around savings and investment that differentiates them. But the long and short of it is, with savings, your risk is lower, the return is lower. On the investment side, you're potentially taking higher risk, but for a higher return.
Wow. So, like the higher you go with the risk, the higher the return that you're expecting. So today, Kike, we're talking about financial assets in a language that the generality of the people will understand. Can you just talk to us about that?
So I'd say financial assets are non-physical assets, and you derive your value from that. I'll give an example. An example is a term deposit. And what is a term deposit? You go into a commercial bank, you give them a certain sum of money, which is called principal, for a fixed rate of time, maybe 90 days, 180 days, or 364 days, and they give you a fixed return. At the expiration or at maturity, you go to that commercial bank and you liquidate your investment. A bond is another example of a financial asset. And a bond really is a long-dated investment where, again, there's a maturity date. But in the example of the term deposit that I gave, the longest duration there was 364 days. In a bond, your duration is longer than 364 days. So it can be 1 year, 3 years, 5 years, and much longer. But your return is also higher. Another example here are stocks. And stocks are what I call ownership rights in a company. You become a part owner of that company. You share in the profit and loss of that company. In this example, there's no expiration. So you can come in and go out as you will. The value from that derives from demand and supply. People wanting to buy and sell the shares of that company. And I think I'll stop with this example of a mutual fund.
Okay, so I'll take it from where you stopped. Let's narrow down now to mutual funds as a form of financial asset. But it's safe to say from my side, from interactions, that not many persons know about mutual funds. If you talk about shares, equities, or even treasury bills, people will jump on that. So talk to us about mutual funds. What, in essence, is it?
Like I mentioned earlier, when you think of investing, or it's clear now that if you have a long-term horizon, investing is a better approach. But the question I ask myself around investing, like the example I give, there are several options out there. How do you know which one to decide? If you do decide you want to buy stocks or equity, the question arises, what equities am I buying? Am I buying shares of company A or company B? A mutual fund is a good investment option that helps solve this problem. It takes away the problem off you. It provides convenience. The cost is low. The risk is lower. And you also get the benefit of diversification. It is a pool of fund. It is likened to Esusu and Ajo. But in this case, it is even better. If you do Ajo, if 10 of you come together and set aside 50,000 every month, when it is your turn to pick the money, you're technically taking the principal. There's no interest on your money. Ignoring the fact that you've been setting aside this 50,000 every month. The mutual fund is a good alternative to Ajo and works almost exactly like Ajo. So rather than put the 50,000 in Ajo, put the 50,000 in a mutual fund, and at when you think you do need the money, you're getting your principal plus some interest. The other way to explain mutual fund is if you think of you having 5,000 naira and you want to buy shares. If you're lucky, you're able to buy 5 shares from the Nigerian Group Exchange, just because the good names are expensive. But with that 5,000 naira, you can invest in a mutual fund and have exposure to anything within the range of 15 to 25 shares. So that way you've minimized your exposure to just those 5 names and a much broader scope of securities, in this example 15 names. And so it reduces your risk.
So somebody will ask, these mutual funds, if you compare to Ajo, I can do Ajo of 10,000. Can I do mutual fund of 10,000? Of 20,000?
Absolutely, yes.
Really?
There are some funds out there that with as little as 1,000 you can invest in them. But on average, with 5,000 naira, you can get exposure to a mutual fund.
Wow. In case you're joining us now, Money Talks is on your radio. Smart Uzechi is my name, and I'm talking to Kike Mesubi. What we're discussing today, investing in financial assets, and our focus today is on mutual funds. You can call us on 0700 923 923 923. I have that gift for the person who's going to be the fifth caller on the program this evening. 0700 923 923 923. This is Money Talks. It's brought to you by CFA Society Nigeria. So let's go to the phone lines very quickly. The fifth caller, you have a gift on my table here. 0700 923 923 923. That's the number that you can call, or send us a message on WhatsApp 0817 313 6193. Thank you, Kemi. Kike, actually, isn't it possible that with an investment I could actually lose some of my money at the time I need it because of circumstances? What kinds of investment should I avoid if I want to buy a car in 2 years? Per your analogy, that's what that Mrs. Kike, you have to take note of that. We lost this call. You can call us back 0700 923 923 923. The other message here says, what is the difference between mutual funds and money market funds? So Kike, maybe you should just deal with these two questions quickly before we get back to the program.
Thank you for the questions. I'll start with the first one, and it was really trying to understand the possibility of losing his money, and technically what are the risks associated with investing in a mutual fund. Mutual funds are a blessing in itself because there are several types of mutual funds. There are the low risk mutual funds and there are the high risk mutual funds. So your choice of the investment of the mutual fund to go with will be a function of your risk tolerance and your investment horizon. If I go back to the example of saving to buy a car in 2 years, clearly you have a clear objective. I need to buy this car in 2 years' time, and I cannot afford to lose a kobo. In such instances, you'll be going for low risk money market fund, mutual funds, and an example of that is a money market fund. If you are 20 years old and you are saving for a project, maybe to buy a property in 20 years' time, you have a long time out into the future. Therefore, it suggests that you can take more risk. So you may want to put a certain portion of your investment in an equity mutual fund where the return is higher, but the risk is lower. But because you have a long-term horizon, if you look at your return over the 20 years, you'll see that textbook suggests, it's not always the case though, but the expectation is that because you've taken on a higher risk, your return will be better than if you put that same money in a money market fund. And the question was asking, what's the difference between a mutual fund and a money market fund? A money market fund is an example of a mutual fund, and it's the lowest type of mutual fund. So if you start from low to high, the first lowest risk mutual fund that you have out there is a money market fund. Okay,
so now that you're there, maybe you can just quickly tell us the types of mutual funds we have out there, and if there are any advantages that mutual funds have as an investment vehicle.
So I'll just give three broad examples. The first one is a money market fund, and a money market mutual fund invests in instruments with low risk. So in there you have term deposits, you have treasury bills, you have commercial papers. The longest duration of any instrument in a money market fund is 364 days. So you can imagine that in 364 days,
that's almost 1 year.
Exactly. You then have the bond fund. And in a bond fund, the duration of the assets in the fund will definitely be greater than 364 days. It can range from 1 to 10 or 15 years. So you need to identify the objective of the mutual fund, understand your objective for saving as well, and then tailor your objective to the type of fund that you have out there. Another example is the equity fund that would invest in stocks of companies listed on the NGX. So those are like the three broad examples of mutual funds out there.
Kike, you know that these are people's money, and sometimes they'll tell you that this is community money or this is my lifetime savings. Let's talk about the regulatory authorities that are looking over these investments. And I'll ask you, people like government agencies like Securities and Exchange Commission, do they regulate these kind of funds?
Absolutely, yes. So the regulator for mutual fund is the Securities and Exchange Commission. The mutual funds are referred to as public funds, and SEC takes a lot of pride in protecting investors. So the funds are heavily regulated to mitigate unhealthy practices that would unduly expose investors in the fund. So they do play a very active role in ensuring that the funds are managed in line with the objective of the funds.
Money Talks is on 92.3 Inspiration FM Smart. Uzechi is my name, and Kike Mesubi is my guest today. We're discussing investing in financial assets. Focus today is on mutual funds. You can call us on 0700 923 923 923 should you have a question or you're seeking clarification on an investment along the line of our discussion. Kike is here for you to consult, very free of charge. I can assure you why she's in the studio here. 0700 923 923 923. And on the phone line, I have something that I want to give to you this evening. You can also send us a message, 0817 313 6193. That's 0817 313 6193. Messages are here. Kike, this one is for you. Would a mutual fund tell me what investments they are putting my money into? That's the question here.
Broadly speaking, I would say yes. So part of the responsibilities of a fund manager who has been approved by the Securities and Exchange Commission to provide this service is to, on a monthly or quarterly basis, reduce what I call a fact sheet. And the fact sheet is supposed to give an overview of the performance of the fund, how the fund is performing relative to benchmark, and give an asset allocation of the fund. So if it's a money market fund will probably tell you at the end of January, I had 50% in treasury bills, I had 25% in commercial papers, and I had 25% in a bank placement. So that level of disclosure will be given. But would you know the underlying treasury bills? Probably not.
Our number is 0700 923 923 923 if you want to participate on the program this evening. But we'll take a short break now. When we return, we'll be talking to Kike about the institutions you can approach to make this kind of investments. Please do stay with us here on Money Talks.
We are professionals. We are impact driven. We are CFA Society Nigeria, a member society of the CFA Institute Global Network of Societies. Our mission is to promote the highest standard of practice in the Nigerian financial services industry and provide a vibrant community for our members. The CFA Charter signals the holders' commitment to professional excellence. As thought leaders, we collaborate with stakeholders to ensure adherence to ethical standards, better education for professionals, and to build market integrity. We are the leading voice for advocacy in the finance and investment industry in Nigeria. To partner with us or become our member, visit us at cfasocietyng.org for more details. CFA Society Nigeria, making finance a force for good.
Welcome back to the program, Money Talks. We have a call on the line. Hello, good evening to you.
Hello, good evening, Captain Smart. My name is Ifeanyi.
Ifeanyi, quickly, let's have your contribution.
Okay, good. I would want to ask Kike here, what would you advise investing in publicly quoted shares during IPOs and also investing in money market, which is more profitable? Because I understand in mutual funds, you're likely going to get your principal back, yeah? But in a quoted company, if you invest in shares during their IPO, is there any guarantee for you to get your principal aside from the dividends you send from time to time?
Okay, thank you so much. You stay tuned for the answer. 0700-923-923-923. And another question coming into the WhatsApp portal here says, good evening. I have 100K and I want to invest. Who do I approach? My bank? That's the question on the WhatsApp portal. So, Kike, in answering this question and that one, I appreciate if you can do it like in a minute and a half. The institutions people should approach for this kind of investment you're talking about, vis-a-vis the question the caller asked and this one.
Thank you, Captain Smart. I think the two questions are related. When it comes to investing, you have to be mindful of the fact that no return is guaranteed. Every return is investment. If you do put your money in a commercial bank, the commercial bank can go bust tomorrow.
Wow.
And the best that will happen to you is you get a certain percentage of the deposits that you have in the bank by virtue of NDIC. I'm not saying any commercial bank will go bust in Nigeria.
Amen.
But I'm just saying this to highlight that there's no risk there's no investment in itself that does not have a risk. And that's where the personal question to you as an individual will say, how much percentage or how much of my investment or savings can I lose? I think that's what would inspire what amount to invest in quoted equities, for example. If I think the maximum money I can lose and not have a heart attack is 5,000 naira, then I won't put more than 5,000 of my money in any quoted company. So the objective as an investor is to understand the risk of what it is you are trying to get into, understand where you are as an investor, and see where that alignment comes in. And do an asset allocation share. Okay,
this one. Where do you approach these institutions to approach for these investments you're talking about?
So the board, the starting point is to say for any mutual fund manager that you want to engage with, they need to be duly registered with the Securities and Exchange Commission.
All right.
I will shy away from anyone who is not duly registered with the Securities and Exchange Commission. So that's a good place to start.
Hello, good evening to you.
Hello, good evening.
Thank you so much for calling. Your name, where you're calling us from, and please use 15 seconds to ask your question.
Thank you, Captain Smart. This is my very first time of calling you on your program.
Welcome, sir. Money Talks brought you out.
My name is Ifeanyi Shudani. I'm calling from Jakonde State. Thank you for the program once again. I just want to know, like some of us that invested in a share, but we changed our address, and our dividend has been going to our previous address, and we are very far from us. We cannot go to that place to collect our dividend. How do we do about it?
Okay. All right. You listen on the radio. She's going to answer. Good evening, please. I want to know how much do I need to invest if I'm planning to buy a car in 2 years? Thank you. You have 30 seconds, Kike, to answer. Dividend is going to an old address. What do they do? And you have to be the oracle. He wants to buy a car in 2 years. Tell him how he can get that money.
I'll start with the second question. Trust me, if I had that answer, I won't be sitting here today. So how much you need to buy? Oh, that's an interesting question because there are different cars.
Okay, kid, let's just listen to this caller. Hello, good evening.
Good evening.
We just have 30 seconds on the program. What's your name? Where are you calling us from? And what's the question?
My name is Sunday, your regular caller.
Oh, Sunday, welcome.
Yeah, I want to ask because these days, I think most of us in Nigeria, we are victims of
investment.
For where to put our money and all that and all that. We don't even know whether it's real estate. We don't know whether it's just as she explained. The one you understand that your capacity can carry kind of. However, how do we know? You understand? Because I invested in an agric. You understand?
Sunday, what's the question? Please go ahead. How do we know what? We're out of time.
Company that are well registered with the right authority.
Security and Exchange Commission.
Yes.
Okay.
How do we know that this particular company is registered?
All right.
How do we verify?
Sunday, thank you. Thank you, Sunday. Please, where can I go to buy these funds? Kike, you only have 15 seconds.
Okay, so I'll take the question on the dividend. The Securities and Exchange Commission has done a lot of work in automating the payment of dividend. So if you go to the website of the company that you have shares in, they have a registrar where you can fill an e-mandate form, and it takes away the trouble of you having to do with fiscal certificates. The dividend goes directly into your bank account.
Right.
The second question is, where do we find these registered fund managers? The data is available on the website of the Securities and Exchange Commission. When in doubt, I'll suggest